Hello, everybody. Welcome to my Tuesday night stock analyzing session. Um, so let's take a look at what's happening um, in the market so we can best make our plans for the future. Uh, the last 2 days, as what I saw, has been red days in the market. Um, so what I have up right now currently is SPY. See the last 2 days and it red, which isn't unexpected. We have periods of time where the market will come back down. As you can see, our last real pullback in SPY was in March 25th. It started to climb and never really pulled back since. So a pullback is expected. As far as how far down I think it's gonna fall is probably somewhere around the 400 range, 400. So if we were to draw that out, it's right here. As you can see, this is it was resistance before we broke from it. So it's probably gonna go back and retest the 400 as support, and that's what we're gonna. I think what we're gonna see. Um, I know the big hype this week isn't so much stock; it's more crypto. Uh, Dodge or Doggy or whatever coin it was, that hype coin. I know that was the talk of the week in Sunday going into the beginning of this week. But we still have to keep an eye out for stocks. Even though it's not as exciting now, this is when you want to start looking at things and making plays. Because as the trader, you once you see those opportunities, or as soon as you start hearing about it, it's already too late, right? And kind of like any hype, you hear about it, it's already too late to get in. So we want to be able to get in before that hype, and to be able to do that, we have to, keep an eye out for opportunities. So as you see, this was a this was a resistance before, tested once, twice here, broke through. So if it comes back and retests 400, this is where we're gonna see um, this is where we're gonna see support at, or this is where I'm hoping to see support at. Um, I have somebody ask me if I'd invested in it. The answer is no. It's not an investment. To be completely honest with you, I wouldn't view it as a investment because it just hasn't had any time. And something like that, it started out as a joke, right? And something that started out as a joke, it's not going to be something that's good long term for the holding. You know, you want to be extremely careful with your money. You don't want to risk it and everything. Um, so that's something that I don't think it's a good investment. At the moment, I'm looking at SPY. So SPY is an ETF. An ETF is an exchange traded fund that it's basically the best 500, where it's an ETF or exchange traded fund that mirrors the S&P 500. S&P 500 is the 500 top stock in the U.S. market. If we were to analyze it, SPY is comprised of a number of stock. You have stuff in there like Apple, which makes up close to 6% um, of SPY, or of the S&P, Microsoft. So in this one stock, SPY, you get 500 stock, right? So it's a little bit safer. It represents the market, and especially for beginners who are just looking to get into the market, SPY is one that you should always be monitoring, because if it goes up, it means likely the general market is going to go up. If it goes down, that means the market is probably going to follow it down. So that's why you need to pay attention to SPY. If anything, and you don't have anything better to invest in, just buy some shares of SPY. It's a pretty safe investment. And SPY's not going to go out of business. If SPY goes down, there's something more wrong, fundamentally wrong with the market, right? So this is what I'm looking at. So SPY, the symbol is right here. So for you guys who don't know, the symbol is right here. SPY or spider is usually what we call it. Okay. So just analyzing it, I drew this line right here. This line is at 400. And so what we're looking for this to do is price is probably going to keep falling until it reaches or gets close to 400 as possible. And then after that, it could break through. We'll continue going down more, even more, or it could go up from there. So you can see here, it bounces, price bounces, and that's what we're seeing. How long do I hold before selling? That's a pretty difficult question to answer because I hold for as long as the trade is good. So there is no length of time that I set in my mind, like a week or a month or a year. I hold for as long as the trade is still good. That everything that I'm looking at is still in my favor. So it could be a year, it could be 2 years, it could be a few weeks, it could be like 10 seconds. There is no defined length of time for me to hold. If I go in, I know where I'm going to get out already. I know where I'm generally looking for, and then I just let that trade go. So there is no defined definitive length of time. I have trades that I've been holding for close to almost 4 years now, or beginning on 4 years now, and the stock's been doing well, so I don't plan on getting rid of it. But there are trades that I get in, like this is forex, but I got into a trade, the US dollar versus the Japanese yen. I got into that earlier this week, actually yesterday, not earlier this week, but yesterday. And I was only planning to hold it until it got to 1800 or 10, oh no, 1900, but 108. And it got to 108. I got stopped out. Well, I took a small loss. And it still looked good to me. So, I got in again today and holding for the same thing. So there is no definitive length of time. It could be a few hours that you're in it, a few seconds, a few days, a few weeks, a few months, or you can continue to hold it. If the stock is doing good, there is no reason you should get rid of it unless you really need the money. But then, you should never be investing money that you need at the moment, because investing and trading is really risky. You don't want to trade with money that you're dependent on. So hopefully that answers your question. So we took a look at SPY. So SPY I believe it's gonna go down for the next few days. If not, probably until next week. Today's the 20th. I'm thinking probably where's the 30th? 30th is right around here. Could go until the 30th. It could go down and then just stay down here for a few days and then come back up. So we probably won't even see it coming back up and retesting these highs. Highs being around 418 until maybe the middle of May. So this is the time down here in the dates, and this is a daily chart. So until probably May or something, the end of May is probably likely when we're gonna see these highs tested again. But now I could be wrong. This is just my way of seeing it. And for sure, I'm not 100% right all the time. And in trading, you can't be 100% right all the time. You're taking risks, and that's why you have to do your risk analysis and know how much you're willing to lose per trade. And if you're betting big, you could lose a lot of money, because it could go wrong, because whatever you think is happening may not happen according to. So, that's what I think is going to happen. It's going to go down, stay at or close to the 400 level for a few days. So that could put us all the way into the first week of May at the very latest, and then we might start to slowly go up. And as we slowly go up, it's going to form this like U shape right here, right? This U shape. And we form this U shape, or we could go back and test this in the end of May, beginning of June. And it could do that for a while. Um, the summer months are historically really, really slow months. We don't really see much going on in terms of gains. Uh, and ultimately, I think we're not gonna really see that much of a boost this year until maybe the end of September. So end of September, we have this much room left. End of September is all the way out here. So if we were to look at the charts, end of September, I'm thinking end of September, we might be getting to like 435 something, 435, 440. But that's if we slowly go up, nothing big happens. We slowly go up, we could probably push 440 in about the time September is getting to a close. And the big runs, the big runs is probably not going to happen until the last quarter of the year. That last quarter of the year is when we see we've been seeing most of our runs. Look at any stock that you could think of, like Apple. Right? Apple didn't have a big run until almost the last. See right here, it didn't start running until November. So November. So in October of last year, it was still sideways, sort of. And when it really did take off, it was in November. So it really took off in November. And this right here was that post COVID. So everything went down super far, and it just kept going. And then we got stagnant for a while, and then for the summer months, and going into this fall, and then this is the last quarter of the year. So I think we're probably gonna follow suit again this year. We look at Tesla. Same thing happened, and nothing really happened, and then from September all the way until November, and then we had that huge run in November till the beginning of the new year. I think that's what's going to happen. So as we go on the later part of this year, we're gonna see that same case. That's what if you're looking to buy into, if it's your investment account, wait until you see SPY chart sort of level off. Closer to 400 is the better. So that's what I'm looking for. That's what I have my eyes on, is that 400 level. So when it gets close to it, we'll see what happens. This has been a really, really long bull run. Bull run is when the market just continues to make higher highs, and we will have months where a few months where nothing really happens. It's just a part of trading that we have to get used to. There's no way of getting around that. Your money somewhere else. But those are months where you just save money and or continue to slowly buy in. Now, this stock has been pretty quiet lately. PLTR, Palantir, and quiet doesn't mean it's dead. Quiet just means that, hey, it's probably consolidating after a run. This is perfect time for when people should be getting into it. Don't wait for the hype, because if you wait for the hype, you could be getting into it really late. You want to be targeting these stocks when nobody is really looking at them. You get into a really good price, and then you position yourself to be successful. So the last high that this one made was 45, and this is a stock that everybody has their eyes on. Even though it's quiet now, we'll just let it mellow out. It's going to mellow out for pretty lengthy part of time. It could be a year or so before it really takes off. But if it takes off again, I think it's gonna take out 45 no problem. And it's gonna so that's basically half of what it is right now. Or 100% of what it is right now. Take out 45, it goes to 50 or even 55. Um, so let's see this one and let's see how it plays out. Okay. Let's see what else am I in. I hardly keep track of my positions anymore. I just let them go. US. This is another one that it's a explosive stock. It was an explosive stock. So, it had an explosion. It sort of mellow out. And this is the loading time. We don't want to load up when it's going up like this because, it's already too late if it's going up like this. So you can see that the last loading time, like right here, that was like 3-4 months. But it's a pretty new stock. So, it could be even longer. It could be even longer. It can go all the way to maybe August again. August, the end of September again. And sort of just like go down even further to $20. But just know that it has a really explosive uh, runs when it does. Because it can go to 20. Next thing you know, it goes back and retests 100, 130, 120. And the key thing is to not get it at those highs. At these highs, you're writing out the good decisions that you made back here, right, to buy it, and the decision making and the risk analysis that you done back here. This is the payoff, right? So the same setup is happening. This is the waiting time, loading up time. You're waiting, you're loading up, and then boom, next run, right? And you see this run wasn't even that long. This was only like a 2.5 months run. So, the explosion comes again. This is a long time waiting for a 2.5 months run. It pays off at the end. So just be patient with it. You don't get into stocks. You're not going to be successful in stocks if you in trading in general if you're not patient. You have to see the setup and you have to wait for it. Sometimes you might take a loss, and that's just the reality of it. There's no way of avoiding that. Let's see. Some EV, some lower level, more affordable EV, Fisker. And this is something that we haven't seen before, with the stock. Likes to level off, have little pops, fall, climb, level off, climb. This is a falling stage again, so something like this. You see first pop, second pop, dies, popped, levels off, pop, dies. I think it's gonna happen like that again. Gonna have a level where it's gonna die off a little bit. People are gonna buy it. It's gonna level out. Once it level out, it's gonna have run. And we could see this, take out 32. Don't be caught not getting it. It's especially if you're one of the ones who watched it the first time. You watched it the first time already. Don't be the people who watch it the second time. When it's running and it's running like crazy, and you're just sitting there like, oh man, should I be buying now? Because if you're in the middle of this run, you've already and you haven't gotten in here, you already made a mistake. So get in around here. Yeah, it's waiting. It's a lot of waiting, but it's gonna pay off. And get this right here. And as your account grows, you can take more of a position. You can take a little bit more risk, and um, be able to afford more positions that make more money, right? Because ideally, not all your positions are gonna be like this all the time. You're gonna find multiple positions that are gonna be doing well while these ones go down, and so you're always gonna be making some kind of money on the side, and that's what you should be aiming for. Don't put all your eggs in one basket. Keep your eyes out for some stuff, and then if an opportunity does come and you want to take a little bit more risk, feel free to do so. And so do that. Uh, this week, I also dabble well, I've done forex before, but this week I actually opened some positions in it. I think the US dollar has just been so beaten up lately. Now I just wanted to take a stab at it. And what I noticed, this is the euro versus the US dollar. And so, I just noticed that it's just been beaten up. So, well, not this one, because when you're shorting it, it means that you're shorting the euro and then you're going to long the US dollar. So I short this position because I think the euro is going to fall. And we noticed this, there's some supporting evidence for this, the swing lows. So higher lows here, higher lows here. This is the next swing low right here, or higher low right here. And it's going to swing again. I want to see a take out 116, 117 right here. So for those who don't know, Forex is working on a PIP system. So a PIP system means it's to make money. It's actually like a fraction of this. So it's 0.0001. That's like depending on your lot size, it could be $1. For every 0.0001, it goes up or down. But forex is another beast in its own. So don't dabble into forex until you really have a good idea of it. Maybe practice on your paper account. I'm using Thinkorswim. Thinkorswim has a paper account that you can try out this trading in. Get a good understanding of it before you dabble into it. Okay. So the US dollar, I think the US dollar is gonna go up. I think I have some US versus Canadian also. The Canadian dollar versus the US dollar. For sure, thinking the US dollar is going to climb. So, got some a long position in it. And I think it's going to keep going. I'm hoping for it to reach at least 129. 129 is somewhere up here. It could be another month or so before it gets up there. So once it gets up there, we see it go up. The good thing about trading is there's so many entities of trade. You could trade currency, you can trade future contracts for stuff, trade equities, you could trade bonds, options, even now the newly added crypto for those people who are interested in crypto. Just study it, have a good idea of what's going on, know what's on the news, know the leaders in it, and then set yourself out for some success, because trading is just a numbers game. No matter how you view it, it's money in, money out, managing your risk, know how much risk you're taking, and then just seeing how it plays out. I would be lying to you guys if I know with 100% clarity what's gonna happen in the market. Uh, you know, that's just the nature of it. You never know. And that's why you have to do your risk analysis ahead of time. You can't just jump into the market and hope and pray that it's going to continue going up. You should always know what you're aiming for, before you do it. Don't don't be don't be the guy or the hunter who just takes a shot at a deer, not even aim, because you're gonna miss. So Johnson and Johnson today had its earnings, and that's why it popped up 2%. 2% for Johnson and Johnson is pretty big because it doesn't move that much throughout the day. Johnson and Johnson is more of a stable stock. It's a stock that you just kind of park money in. So today had good earnings, really good earnings right here. So almost $2.60 per share. Earning reported, climbed up. But Johnson Johnson always comes back. It doesn't just go up straight. It's gonna go up a little, come back. And you see, this right here is a yearly chart, and normally it doesn't go up that much. A year per year, right? So 2020, right, from 130 to 160, so $30 gain in a year. See, some years, it just almost breaks even. If you get in here and get out there, So it almost breaks even. Some years, you do better. Years like this, right? But Johnson Johnson is pretty slow. It's a slow grower. Somewhere where you just kind of park your money and do other stuff with it. Sell contracts against it, get some of that money back to help with your cost average. So Johnson Johnson, T-Mobile. T-Mobile is going down again. T-Mobile has a range, and when I talk about range, this is what I'm referring to. I'm gonna draw it out for you guys. Oh, come on. Of course, my drawing tool is not working. Uh, okay. So this is the range that T-Mobile is playing in. And you can see it's at the top of that range right now. So I saw some resistance. I think it's gonna try and pose and break this 135 level. But this 135 level, was a resistance for a while. I couldn't break it. It came back down to gather some strength. Got some strength down here, and it went back to test it. This is the first retest after this rejection. And so what we're hoping for is that this continues to go and retest it again. If and if this 135 is a really heavy area and they just can't break through, it could fall again. It could fall back to 120. Those who are interested, you could be buying it at 120, or you could be buying a lot higher, around 136 when it actually breaks above, and then you set a stop for under 135. So you're hoping that it never comes back to 135. It just keeps going. You know, and T-Mobile has been doing pretty well too. Year over year growth for the last say since 2012. It's just been growing and growing. And it started out in 2007. So, for a stock like this, it's still pretty newish, I would say. 'Cause, the first few years is not going to be doing that well. Catch attraction dies off, but then this is after like 5 years or something. This is when you see the growth, and then it becomes a giant. Hard to take down. They're doing well, so um, they've already made it, and people are just going to continue to buy it. So keep your eyes open on this. T-Mobile, XLNX. Now, this stock that's been doing really well for a very long time, and as it's coming down, you should be keeping an eye on it, because if it keeps coming down like this is opportunity right here. This is a monthly chart too, so this is an opportunity. This is where you want to park money, as it's coming down, not when it's going up. Because if it's going up, you can add to that position too, but this is when you're supposed to just relax and let your money work for you. When it's going down like this is when you're buying. You can see this pattern over the last like 10 years or so. Every time it touches this purple line, which is the 50 moving average, it likes to just bounce off. See, so it's been keeping above it. It's a really good pattern the last 10 years. And so, how you gonna fight something that has been working for 10 years? I wouldn't fight something that has been doing well for the last 10 years. If it goes below that, I'll continue buying. And this is a good stock. Right? Good stock. This pattern recognition. You recognize the pattern, you buy it. Do your risk analysis. You don't wanna blindly get in and then, you know, know what's happening, know what stage that stock is in. ABC, and I think I keep talking about this stock because it's in my golds list. Golds list is everything that I would consider buying and playing or whenever it comes into a good area. So you can see this stock. I drew this range out before, but let me draw it again. Um, so I spent multiple years in this range right here. I spent 1, 2, 3, 4 years, and this range you can even see the bulk of the time was in between 80 and 95, and it broke above it, and this is when price is starting to trend again. You can see the last high was at 120, and it's sitting in right at 120 again. So it's testing those highs again. And if we go back even lower, this is the weekly chart, monthly, weekly, daily. It's trending well, and even though it doesn't respect this purple line, the 50 moving average, whenever it does come back to it, it tends to always try to come back above it. Doesn't respect it too much because it does violate it a few times. But you see, it violates it. It does respect that 200 though. The 200 is this yellow line. But as this thing gets more strength, people are going to notice it more, and that's what we're banking on. It's people noticing this pattern that it's been doing. It's climbing. You see the lows every time it sets a new low. It's always a higher low. So next time, if it comes back down, I think it can only get up to like maybe 112, 114 in this area. So if it comes back down to that area, that's a good buy. And from its highs, that's $6, right? You say, "Oh, Bill, what $6 on $100 stock?" Well, that's 6%. That's 6%. You gotta view it like that. You're not gonna get 6% from a savings account. You know, might not be a lot of money, but that's money. That's free money. 6%, and it adds up. Imagine doing that every month or so, right? 6% for every month for a year, right? Let's do the math on that. 6 times 12, 72% of your money return. I do that. And that's on one trade. Imagine having like 5 or so trades like that, right? Your money gets compounded really fast if you do it that way. Just notice these patterns and just continue doing that. Right? That's one. So ABC, that's on my goals list. Pepsi. Pepsi is where you park your money to. Another oldie. It's an old stock, but it's a good stock. Right? Old stock, but good stock. Look how nice that pattern is. And think of it as, if you think about it as real estate, right? Well, it's unlike real estate as in because it's not physical, right? You can get a physical stock brochure or a stock certificate, but it's not going to mean anything. But you can still make money off of it, right? You can continue to buy it. Once you get 100 shares, you can become a seller, and that's when you start getting money. You start getting a lot of money. And with Pepsi, it's a stock that gives dividends too. You can see the dividend is $1. So $1, a little less than 10%, but that's still pretty good for $150 stock, or close to 150, right? You get $1 every quarter for every share, right? And then let's go look at the options too. If you want to pull up the options, when you become a seller, say you build up your position and you get up to 100 shares, then you can go ahead and sell some contracts. You can aim out, you go $30 every time. Oh, not $30, but 30 days out every time you're selling some contracts. Right? You're selling the 50, the 150, or the 160 if you're more conservative. 160, you're only getting $5, but 150, you're getting $100. $100 every single month. Now that's great. You might not think it's a lot of money, but let's just look at this. 100 shares times 145, or let's make it 150 right now. right? $150, $1,500, right? Costs you to do this strategy. $1,500, you know, for some people, $1,500 is a lot of money, but it's not something you can't save in a year or 2 years. Eventually, you could do that and say you can make $100 every single month for a year easily because you're a seller. So that's $1,200. And on top of that, you're getting what is it, $4 every single year, right? $4 every single year, shares. So you get for a free $400 every single year for the 100 shares you have. You get $1,200 for being a seller, and you get any appreciation of the stock, right? So right off the bat, you're already winning $1,600, right? $1,600 divided by your initial investment, almost near 11%. So 11% just for Pepsi, a year, and that's not even considering in the stock growth, because the stock growth, if it does grow, you're getting that gain. If you're not getting that gain, or if the stock doesn't grow, you're still getting an easy almost 11% return on your money, right? So it's that's why it's on my goals list, because it's one of those stocks where you can play it, so safely, and it's Pepsi. It's not a brand that's gonna go anywhere soon. Who doesn't drink any Pepsi products? And you think it's, oh no, Pepsi is just soft drink. No, Pepsi is a lot more brands too. I think they own like water and juice, and basically every fast food place has them. Every fast food place, every restaurant, has to have Pepsi products. They're getting a royalty, vending machines. So you can see, and it goes all the way back to 1985 when the first IPO started at $2, and it just kept growing, right? And there's no sign of this thing stopping. Look how these are buying opportunities. This is the financial crisis back in '09. You can see, every time it came back to this 50, that was an opportunity. It's still pretty high from that 50, but it could come back if you're lucky. If not, you buy it, you can always make your money back. At 10% a year, I'll be glad. I'll hold this for until I die. Make 10% easily. Every single year, 10%. You snowball. You think about it, right? And let's do the math on it, right? $100,000. You take $100,000, and if you put it on just Pepsi, and you get 10% of it. Dollars times easy 10 grand every single year, right? And it keeps growing with you. So the more money you have, the more money it grows. You let your money work for you. So for people who say, "Oh, stock's kind of slow," probably not. You probably need to do more research and find other ways to make money. Yeah. So there's more than one strategy, and the more strategies the better it is for you. So goals list, PPG, it gapped up the last few days. I don't know what happened to it, but man, I don't think anyone could pretty much predict these gap ups, because they literally went from being 153, and then all of a sudden, the start of this week, or no, Friday, it just goes poop. I'm gonna go to 170. Present surprise. Another one on my goals list, because you can do the same. They have good dividend too. If this would load, this doesn't load, but their dividend, they have a pretty good dividend. 50 cents, 50, almost 60 cents, and they've been growing. Their dividend's been growing, consistently growing. So you have that benefit right there. VV, which is Vanguard Large Cap ETF. And for the newbies, I almost recommend getting ETFs over stock because you don't really know what you want to get into yet. You also want your money to grow when you're learning. So, you want to get an ETF that helps you with your growth without putting you into so much risk. And when you get into those positions where your money is growing and you're learning how to employ other strategies, then it builds you up. Don't jump into the market and go into these big positions and expect to be a millionaire next year. That doesn't happen. The math doesn't work out that way. If the math doesn't work out that way, it's not going to work out. So always consult the math. And with an ETF, because an ETF is comprised of a number of stocks. This one's not loading, but this is just comprised of all the large caps. So large caps is things like Amazon, Apple, Google. And instead of buying those stocks individually, for a small sum of like almost $200, which $200 you could probably spend that in a month without even realizing it. $200, you get a small portion of every one of those stocks, and if it does well, your holding continues to do well. So with this, $200, you can go ahead and do that. But none of those stocks are you can buy individually for $200. But if you get an ETF, that's like getting a small piece of that pie. You see, this one's been doing well too. Financial crisis, that was bad. That was a bad time, but that was also, you got to turn it and look at it as a good thing. If you were investing at the time, it went down to $30, and now it's almost $200. So, just a short amount of time, you have to view bad things that happens to us as in a good light. Last year, as bad as it was, COVID, that was an opportunity that we're probably not going to get back. We're probably not going to get that until another 10 years or the next big crisis that happens. We're always building up to these crises, so they do happen more often, but, if it's like here and there, maybe 10 years, 8 years, 10 years, 13 years. Keep your eyes open for it. When it does happen, have some money on the side. Union Pacific, these guys are railroads, been doing really well. Stock. It seems to have hit a ceiling. Hit a ceiling here. So be on the lookout. It could be falling. The stock you can see here. This is more zoom in on this. It's a monthly chart. So one of these candles takes 30 days. But you can see, we look at this, it's not going up anymore. It sort of just levels out. And so if it goes back down, we can see it come back and retest the 200. 200, the 200 level, not 200, as in this yellow line. Well, the 200 lines up to 200, so that works out. Come back and it could potentially come back and retest 200 or get as close to 200 as possible. And for the more risky of us that knows how to trade some options, be long options, you could short it down to 200 and then maybe write it up as it comes back and retest 225. Union Pacific, they've been around forever. I think if you guys have read a lot of trading books or investing books, they talk about Union Pacific a lot. A lot of them, it started back in the 60s, and they talk about Union Pacific as being one of their stock that they played. Even I believe even Warren Buffett played this stock before, where if he doesn't have a position in it, which I believe he does, this is one of his stocks that he played a few years back too. Because when the crisis happened, what he told himself, he was like, railroads don't go away because people still need to, transport goods and serve for their companies and everything. And so he made that realization, and then he invested in it heavily. Stock was going down, he was investing in it and paying off. So if he's doing the same thing, you should be too. ITW, ITW, slowing down things, which is good. If this slows down, it'll come back. 216 or 200 again. Hopefully 200 again. You see some support, 200, resistance at 220. So as it comes down, let's get some of that. Visa. So I drew out this range. Last time was I did my live. I think it was last Thursday. I drew this range out, and I said, what I wanted to see was it come back up here and it comes back down, retest this support at 220, and that's exactly what it's doing right now. It's retesting that support at 220. So as price comes back down here, let's see if it levels out or if it comes back to 220 and breaks right through. If it breaks right through, be on the lookout because you can pick up some shares as close to 200 as possible. Visa is not going to go away. If anything, large companies like Visa, they're going to find ways to adapt. If crypto is the next big thing, they're going to get themselves into crypto. So, these bigger companies, they don't die easily. Even if they fall for a little bit, they're going to find ways to reinvent themselves, stay in the game longer. These guys, they can make bad plays for the next like 10 years and still be making money. So be on the lookout. Just watch it. This is something I'm watching right now. STZ retesting its all-time highs, 240. Let's draw this out. All-time highs. I think it's going to play in this range for a while. This range between 220 and 240. $20 range. If you notice that $20 range, make use of it. Right? $20 range, you're thinking to yourself, $20, that's not much. That's a pretty big deal. $20. You imagine $20. You short some here, it goes down to 220. You get out, you buy some shares, and you keep doing that, bouncing. Do it 5 times, you make $100 already, and that's off $200. So then you're making 50% for your investment. Just gotta notice these patterns. Sometimes you don't shoot for the moon. Yeah, you just see the clouds and you identify them. DHR, another range bound stock. You see this range right here. These ranges are easy to spot. It's just a place and price that's just hasn't been broken. And see, you see it on the monthly, you see it on the weekly, you see it on the daily. You see price has just been playing around in here. So we're just taking what we see and playing it. There's nothing to it. That's easy. You see this range and you play. You see, right? And the more time that it tests this range, the more people pick up on it, and it becomes even truer. And then it just keeps doing that until what eventually happens is people see it too much, right? So many people short it. That's why you see a breakthrough here. And there's so many people long it, and you could see it break up above here. And it'll just keep doing that until one side eventually breaks through. But this is a really good stock. So what's going to probably happen is more people is going to keep buying it down here than people are selling up here. And we're going to eventually see this range break. It's going to go one day it's going to break up above 240 and just stay above. So we'll go to like 260 or something, 270. Comes back and retests 250 and doesn't break through, and then it's just gonna go and trend for a few months, probably go up to 300. That's usually what happens. It happens here. You can see it. We look at the monthly chart. Monthly chart. This is what happens. It stays in a range like here. Right? We draw out this range. Right. At first, people don't pick up on it. Right. It looks like a small range. People don't pick up on it. Keeps going on back up. Does this, or this was one of the range. And you can see every time it formed a range. Every time it formed a range, the range gets bigger or smaller, however, whatever defines it. And then, when it does break through, you have these big runs. So you see this range. If you're a long-term investor, buy at the bottom of the range and just keep holding it. If not, if you're just a swing trader, buy at the bottom, sell at the top, buy at the bottom, sell at the top, buy and cover at the bottom. You just keep doing that over and over. Different stage of it. Play this drawing. I don't like a messy chart. So you do that. See, I have an alert out set up for 189. I don't think it's ever gonna get there, but some miracle happens. SYK. SYK. Looks like it broke out of this range right here. This daily range. It was in this range for a few months. Right here. So you guys could see, it gapped up right here. So back in November, it gapped up, and then it sort of just leveled out. Price leveled out. So it's gonna come back up. And this is the break. So it took a few months for it to break. And when it did break, what we want to see is, it's holding above 250. And when it holds up above 250 like that, right now, it's $8 to 250. And so if you get in a position like this, if you're thinking of a swing trade, you want to set a stop somewhere below 250, so 245 or 247 or whatever, and then you ride that thing going forward. And if this thing keeps going, it takes out 270, 280, 300, 310. It could just keep going, and it'll probably never come back to 250 again. And that's the hope. Every time you get into a trade, you never want it to come back again on its way out. So this is probably the start of a run for this stock. This is the opportunity. Start of a run. So let's see. Let's extend the time. Let's look back at runs that has happened with this stock. Right, let me expand this. Maximize this so we can see 10 years. So every time, so whenever it has a run, it's a really long run. So this one, really long run. You see this stock, whenever it pops up, it has a range, pops up. This one died off. This is a fake breakout. And then it formed itself, broke out of here, just kept going. So this stock, whenever it runs, it likes to run for a long time. And this is why I only use two indicators, just my 50 and my 200, because it keeps things simple. You can see if I just play off this 50, there's times where I will lose. There's some times where I will win. Or if I just play off 200, even more discipline, play off the 200 and just keep going from there, right? I would have lost here, but if I played off here, that's a win, right? You get in at 111, out up somewhere up here, right? Or even here, that's a pretty big win. 60, 50, 60%, somewhere in that range. So this one, it broke out. I'm thinking it's going to keep going. So if you see something like that, something like this. Play this because you never know what's going to happen. ACN. ACN. I think I just might have missed this one. ACN. Breakout or the start of a breakout. So right here. And it broke out and never returned. So this one might have been already too late in its run. It's probably already starting. But you can always try to get in as close to this 50-day average as possible. So around 270. But if it runs like this, I don't think it's going to come back. UNH, United Health. Another stock that's just, man, that I missed. Sometimes it pays to just look at a few stock, but dang. I think I missed this one, this run right here. You see it came, so this is what I'm talking about. Whenever it comes back close to this 50-day moving average, close, this is probably as close as possible to it. And then it just takes off. I don't think it's ever going to come back again. Or if it comes back, it's going to be somewhere higher up here. As time progresses, so you're extending these lines and time progresses, it could be somewhere around here. 370, right? 360 here, 370. Okay. So those are the higher cost stock. Sometimes higher cost stocks, they're more safe because especially a stock like this, you look at the monthly, it's just been doing well over time. So you have that safety in it. It doesn't completely remove all risk. It just gives you a little bit more sense of safety. So, the more times something repeats itself, the more people get in tune with it, the more it continues to follow that pattern because people pick up on it, right? Let's see, a lower stock that I think could do well, Zynga. Now, Zynga, really, really slow. And, if we see, it started not too long ago. And if we look, this is really similar to T-Mobile. Look at T-Mobile, what T-Mobile did, right? T-Mobile had a start, it tumbled, and then it climbed out of there. So Zynga could be doing the same thing. It's had a good start, tumbled, then it's starting to go up again, right? And this is still a really, really cheap stock, $10 stock. And as that stock grows in price, you continue to do more of it. Think of it like this. For 100 shares right now, for 100 shares, it's only $1,000, $1,100, somewhere around there. And as that stock grows, right, and you become, and we go back to talking about more advanced strategies, becoming a seller. Right now you're not getting too much. You're getting maybe 20, $30 for every month. But 20, $30 for a $10 stock, that's 1%. You're getting 1% back every single year. And as this stock keeps growing in price, right? If it comes back up to the $15 mark or breaks it and goes to 20, 30, and it continues to catch traction, right? Go to 30, 40. This price is going to grow with it. Right? The price of these options are going to grow with it. So your returns are always going to get bigger, longer, right? And this stock continues to be more profitable as a company, they're going to start issuing dividends too. Eventually, they're going to hit a growth, a blockage, and they're going to, they're not going to know what to do with all that money. So they're going to pay back shareholders. So they're going to pay you in the form of dividends. So then you have another source of income on top of that for holding the shares, right? You got the share appreciation. You got, you could be a seller of the contracts, get some of that money up per month, and then you get dividends on top of it. So as this stock is really low, maybe throw in some money that you can afford to lose. Not think about, right? Something that you you want to pass on to your descendants, your kids and their grandkids, right? Could be a $10 stock right now. 10 years from now, it could be $100 stocks. 50 years from now, after you're long and gone and everything, maybe this could become a global something, a global entity, something that everybody knows, like Coca-Cola. Point is, every stock starts somewhere. This could be a start to a new stock. You're gonna have to take a little bit of risk, a calculated risk, right? You're thinking to yourself, $1,000 is a lot of money for some. It could be, pretty cheap for you, and it could go somewhere. But you have to take a little bit of calculated risk. But all right, that's the hour. I want to thank everybody who joined me this week. I know I ramble on a lot, but I hope that you guys are learning. Um, and hopefully this continues to be a good thing. I want people to learn. I just want to provoke a thought in you guys to think of different strategies and different ways of looking at the market. So hopefully this is helpful for all of you guys, and thank you for joining me, taking the hour. But thank you, and you guys have a great night and a good trading week.